Welcome back. Now, at the full-year mark, Master Drilling has delivered record revenue of over $270 million, filtering down to the bottom line. In dollar terms, headline earnings per share grew by just over 22%, and in rand terms, just over 21%, while the dividend has been hiked by nearly 24% to 65 cents per share. Looking ahead, the group boasts a stable order book and a healthy pipeline of $695.8 million. Joining us for a closer look at the numbers is the man behind the money, company's CFO, Andre van Deventer. Andre, thanks so much for your time this afternoon. And let's start with that record revenue. What are some of the factors that have boosted growth in the top line?
Thank you for the opportunity. Yeah, look, 2024 was challenging in certain places, but I think what we see coming through is the investment strategy that we had in the last couple of years in investing in the down cycle into capital equipment, especially on the larger side of equipment. And good to say today that the 4 XXXL machines that we have in the fleet, they're all fully utilized. So that obviously plays a big role in our increased revenue. I think the fact that we are so diversified geographically, that helps us a lot. You know, if there's some part of the world that's struggling with some sort of commodity or politics or anything, it's good for us to move equipment to other places. So I think the geography has always been very good for us. And then also in the different commodities that we play in, you know, we between gold and copper, that's normally between 50-60% of our total order book and production for a year. And those commodities have really done well, as we all know. And then also in the polymetallics and the PGMs in a lesser way, still very good for us. So I think overall, the way that we diversified, that played a huge role in us performing these numbers.
So talk to me about some of the operational challenges. I see that operating profit came in lower. Yes, HEPS is up, but operating profit, as mentioned, down, as well as your EPS downs. Just talk to me about that in particular, and how then the impairments also just weighed on some of those profit measures.
Yeah. So the impairment was the biggest impact. We reported that half year as well. So it's a non-cash entry. You know, it's equipment that's not been utilized for the last year, and we didn't have a contractual agreement with that when the year ended. So still impairing that equipment. But the good thing is, you know, it doesn't have any cash effect on us as a business.
Okay.
So operationally, we really done well. We've hit nice growth in margins. And the other good thing is we quite positive that one of the pieces of equipment that's been impaired, we might sign a contract for that in the near future. So that would be a nice turnaround, reversing the impairment and having revenue come through in that part of the business. So yeah, but so operationally, the challenges that you mentioned, for us, it's important and for all businesses to be profitable, to have a very good result. And I think the last year, there were 2 businesses in the group that had operational issues. And we've, from management, got very involved with that. So hopefully 2025 will not see any loss-making entities, which will also have quite a big effect on our operating profit going forward.
And you know, you talked about the diversified nature of the group and how that's been able to, you know, just help you navigate this tough trading environment. And I'd like to touch on the Africa segment. It seems like the group is really positive about the region in particular, with that segment also just performing well. Talk to me about the opportunities you're eyeing in Africa, and also just what's fueling the positive sentiment in the continent.
Yeah, Africa has been the last couple of years, even if you exclude South Africa from that, Africa has really been good for us. We've got a couple of good, solid clients, blue chip mining clients that we do work for up in Africa. And it's mostly in the gold and the copper sector where we're operational. And you know, there's a lot of developments happening in Africa, different countries. You know, in places, Tanzania has been a new addition for us in the last couple of years, where we see a lot of growth. The DRC has always been good for us. We've got 3, 4 different projects that we do there. Ghana has been a area where we started growing into as well, Sierra Leone as well, and Mali. But I think the big change or contribution for us looking forward will be in Tanzania area, which is gold, and we all know what's happening with gold at the moment, where the prices are. So we might even see some further potential growth in that part of the world. So on Africa, very, very positive, and it's the gold and the copper story behind that.
You know, you mentioned gold and copper, and I just want to touch on copper a bit more and just the move into green metals that we've been seeing. Are you seeing projects and contracts within that segment in particular?
Yeah, copper for us, especially the copper side, has been growing quite a lot. And, you know, it is the African story, but also the Chilean story. We growing quite rapidly in Chile as well, with a lot of different projects that's coming up to stream there in Chile. So yeah, that's been good for us, and something we need to focus on and keep our foot on the pedal to grow our business in that sector.
Andre, you know, from the results commentary, the group seems to be taking, you know, technological advancements quite seriously. Now, how has digitization and I guess just automation of certain machinery just improved operations, and also from a safety perspective?
Yeah, our focus, I mean, it's two different things. I'll talk to both. The one, safety is very important for us, and helping the miners to be safer, conducting business. So that's what raise boring is all about, taking people out of the shaft developments and doing it mechanically. So that to us, it's number one, the safety of the people. The machine learnings and the AI that's an OT that we've been implementing is for the equipment to basically drill itself, to do remote drilling, and two things there as well. One, it's safer, less people being in contact with equipment, and two, on efficiency. At the mines, there's a lot of non-productive time where they've got blast and entries, time like that. So if we can have our equipment continue drilling during that time, it's a huge efficiency benefit. And we saw the other day, you know, when we had our board meeting, we actually showed the board in India where the guys are drilling remotely, nobody close to the machine, and drilling it actually from the Fochel office. So that was quite impressive to see what the guys are busy with. So that's the one side. The other side, like you mentioned, the new technology and the A&R business that we invested in, and now also in Chile, we did a small acquisition on that, helping with the safety, the proximity detection, and the missing person locator business, which is all around safety for people. Make sure everybody that goes underground a day, they come up safely at the end of the day for their family. So that's a big focus where we are and working around the safety of miners.
And before I let you go, just your outlook and your reading on the current macro environment as we move forward, especially as, you know, you are a company that really invests a lot and spends quite a significant amount when it comes to your CapEx.
Yeah, so the CapEx focus has been, like I mentioned, we spend a lot on the down cycle to see the benefit on the up cycle. So that's helped quite a lot. If we look at the forecast going forward, we still have, I think, 11, 12 machines in production, construction at the moment, which we would hope to roll out in 2025, 2026, so we can get some organic growth on those equipment being added to the fleet. So it's a big focus for us to grow organically. We're looking at some acquisitions as well, potentially in the future. So it's a lot of things happening. I mean, the diversity of the business, to make sure we invest in the right areas with the funds available. Although we do generate a lot of, like in this last year, we generated $42 million of cash. But we also spent $42 million on CapEx, just showing how we invest in the business to grow it. Some of it is maintenance capital, but a lot of it is on future growth. And then obviously the new technology stuff that we're busy with, the shaft boring device machine that we're busy developing together with the IDC. We see a big market for that in the future. And, you know, it can be a whole not only for the company a big change, but also for the industry. You know, when you can drill a shaft mechanically for 2 kilometers at half the time that they do it now, getting the ore out quicker. So that's something we're pushing hard to implement that, and then the tunnel boring and reef cutting technology we're busy developing. So a lot of interesting things we're busy with. But the core of the business is the raise boring that makes all the revenue and profits, and we can use that to develop the new technology instruments.
Andre, thanks so much for your time and just taking us through the year that was for Master Drilling. We will catch up with you again in the next 6 months. That was Andre van Deventer, CFO of Master Drilling.